Okay, we're in a little trade trying to make some money here, as I always am, on GBP USD. And the reason I've entered for it, because I'm trying to actually get better at explaining all this stuff rather than just being like, buy, sell. So, as I do absolutely every morning, I will mark my chart work up, and you can see here I've had right here a bullish breaker structure. Why is it a bullish breaker structure? Because we have a high here, and that was the old swing structure, and now what happened, we had a candle closure right here. You can see this black candle closes above the old high, so that now means we're in a bullish breaker structure. Whenever you get a breaker structure, you immediately you immediately get your low. Easiest way to find that stuff, if you don't have eyes that work very well, is just literally go and draw a big box and then be like, oh, where's the lowest point? Right there. Like, draw a box, it makes it so easy. Now, you've got your swing low, which I've marked up here saying swing low. Then how do you get your swing high? As you go, okay, is there a significant retracement? And I'm like, this massive fucking bit that comes down here, yeah, that's a significant retracement. Okay, simple. So there's your swing low, there's your swing high, that's your swing structure. Then we draw this like blue and grey box where it's like, when it's in the grey, it's cheap to buy because we're in an uptrend, remember, bullish breaker structure. And then when it's in the blue bit up here, it's expensive. Like, imagine this green line where it's 0.5 and Apple costs $10. When it's down here, it costs 5, and when it's up at the 0, it costs 15. It's like, well, where would you rather buy? 5, 10, or 15? It's like, you'd obviously rather buy it at 5, and the market's the exact same. Where they'd rather wait until it gets all the way down here into this green zone, or into this grey zone, before they get into like big buy positions. Why would they want to buy tons and tons of what we're on GBP USD when it's not a good price? So they just want to wait for a retracement before they get in for big buy positions, and we do the exact same. Now you go, okay, whereabouts could a big buy position come in? And you might be asking Callum, like, oh, I don't know. And it's like, it's pretty simple. It's basically, where was there a big down move before that then caused a big up move? Because then you can expect, well, if it goes into that zone where it went down and then it went back up really strongly before, it's like, well, it's probably going to do that again. And then sure enough, that's exactly what I do. So I go, okay, here's the start of a big up move. Where's the one candle that caused that? And it's like, it's this grey guy right here. So what do? I just draw a box over it. This is called an order block. The move down that causes the move up. And then it's like, well, you can just expect if it comes back into this green zone again, it's probably going to go back up. But the thing you've got to watch out for as well is, let's say, maybe like this grey candle here. Let me draw it. Maybe, or like, here's this massive move to the upside here. He'd have probably said it was what, that grey downwards candle there. You'd have said, well, that's one that that could have worked. But it's like, okay, what did price do when it came into that zone right here? Blasted right through it, showing it doesn't respect it. It's not a strong or valid zone. So what do? You just get rid of that shit. And then it's like, okay, so it doesn't respect the near one, maybe it'll go to the extreme one. And then it seems to be respecting it here. Now we go, okay, we're in our zone on the 15 minute. What do we do now? We go down to the 5 minute to look for the entry model. Enters the zone. What am I looking for? Sharp V-shaped reaction. Boom. We've got that right here. Why do we need a sharp V-shaped reaction? Because we have got right here, low's been created. It's kind of consolidating. You'll probably find as well, maybe it's reacting off of this one as well. Or you've got like other lows here. And it's like, here's the bottom. This is just broken here below that, creating a liquidity sweep. That then allows the market to come in with buy orders because it's pushed below. Oh my gosh, sorry guys, I'm muy enfermo, a little bit sick. That's my basic Spanish there, even though I call myself a sick girl with enferma there. Then I had to correct it to enfermo. There you go. Who else teaches you trading and absolutely shocking Spanish at the same time? Not many people. But anyway, what was I saying? Yeah, you think, right, if the market was going down and then just had a little, tick back to the upside, you would get in for a buy. You'd be like, it's going to keep going up, it's going to keep going up. And what do you do? Put your stop loss below sells. And then when it was coming down, what do? You would go in for a sell and take your take profit below, which is you would also have like limit orders and stuff below, which are sells as well, if you think it's going to keep moving down. So you've got people who are in buy positions with stop losses, aka sells, below lows, and people who think it's going to keep going down would place limit orders, which would also be sells, below lows. So basically below these lows you have a shit ton of sells, and it's like, okay, if you're an institutional part of the market and you're trying to move it up, what do you need? You want to put in shit tons of buy orders. Who's going to buy those buy orders off you? Well, you need other people who are putting sells in, and it's like, oh shit, where are we going to find a shit ton of sell orders for you to put your billions if you're some bank trying to manipulate the market? It's like, well, right below here is where you can put like absolutely tons and tons and tons of buy orders, because here's where the sell orders are. So what do the market makers do? They will do a small little push to the downside, causing a liquidity sweep where the market bounces down so that it can facilitate the up movement. That's why you want to see the sharp V-shaped reaction. That shows they're getting into the market. Then after that, what is my next conflict? This is all the entry model stuff, by the way, in the 5 minute. It's like, here's a previous high. Do we break above it? Yes, here we go right here. Break above it, showing a fractal market shift. They even have the little thing to say like, market shift. There we go. What does this show? This shows that on the smaller time frame, the 5 minute, we're starting to go and become bullish here. Why is that important? Because the market is fractal. It'll always change on the smaller time frame first, and then after it's changed on the small time frame, the big time frame follows. So it's like, okay, you want to catch this big move on the 15 minute time frame. Well, you get confirmation from the small on the 5 minute time frame, and then it's like, okay, so where's the exact bit that we enter? And for me, it could have been as well, if we go down to the 5 minute, this consolidation zone here, that could have been one, or I'd done the flip plus sweep zone, which is like extra confirmation where you go, okay, market's coming up here, what do you expect now after a market shift? Up, down, up, down, up. And then it's like, oh, it's reacted off of this zone up here. You can see it just taps into it, comes back down here, and then it's like, okay, it's now tapped into this little down candle here, and it's like, once it enters into that, you enter for a buy. When it re-enters into that zone, I don't know why mine is so fucking wonky, but it was actually on that grey candle, I re-entered. And then on top of that, you can see here, my stop loss, you always want to do 2 pips. I've been fucked by that before, where I've just done it like right behind the zone. And you can see that like, well, I'd still be okay with that right now, but I'm just like, my plan says stop loss of minimum of 2 pips. So it's like, there we go, 2, and then a risk to reward of 3, and it's like, that could be a little bit higher. There we go. And that's basically it. Like, once it comes back into your zone, taps you in, you're good to go. And it's like, damn, you just sit about now and watch the money come in. And I've just put on a position where you're never losing more than 1% of your account for the trade, and that's it. So again, if you've got a 100k account, you should be risking at that stop loss no more than £1,000, and if you're on drawdowns in your account, reduce that to like 0.5 or 0.2 depending on, usually my rule is like, if I lose 2% on a 100k account, that's 2k, I would then go to like, okay, we're going to do 0.5% of the account, so we're only going to risk £500 per trade. And then if we lose even more and we get down to 5% drawdown, we're only going to use 0.2%, and you're still taking 3 risk to reward trades, and that's my entire strategy right there, nice and simple. And it's like, now I just wait for this shit to go up, and that's it. I just go and get a coffee. It's like, I've done my work for today. Or I can check other pairs and stuff. You can see gold here, what you call it. I'm still waiting for it to retrace into any one of these zones here that I've determined, and then wait for that same entry model. Euro USD, it's in the zone that I was looking at right now a little bit, so maybe I could get something, but because it's broke through here, I'm like, I don't really trust this zone right now, so I'd be like, yeah, just wait and see what happens with Euro USD, because I'm like, it'll probably come back down here, and then I can look for my entry model. Oh, this will actually be good as well. I'll show you like how I would mark the stuff up real time. Reset chart. Okay, so look at this here. I'll delete all of this shit and show you how I would actually mark this up. So it's like, here's a swing structure we've got here, swing low, swing high. We've had a break of structure to the upside. See this big black candle that breaks through, candle closure above the swing high. So we're just going to go bullish break of structure, pull it back to there. Now, what I always say, make it simple as fuck. Go and do boom, boom, draw a box, pull it down, fucking get that magnet off so it's not fighting against me. Okay, there's your range. What is the lowest point? It's like, oh, it's right there. Okay, cool. Let's now just, and now I want the magnet back on. Why is life so difficult? Okay, that is the new swing structure. And then, oh, look at that. We've got a wick going below. Is that confirmation that we're now out of the structure? No. It's a case of just like it tapped below it. That's all. Like, it can tap below it whenever the fuck it wants. As long as you don't get a closure below it, then your swing, not fractal, swing structure is fine. And then swing high is just when there's a significant retracement. And then you would just go draw a box. Just like that, extend it. Same shit, so we're looking for buys. Where's it in the discount? It'd be like, okay, right here, there was the candle. Boom, that's where I would have been looking for sells. That's my extreme zone. We've already missed that. When the fuck was that? 1 in the morning. Yeah, so that's just not the time I trade. But that would have been a pretty nice entry. Go down to the 5 minute. Same shit again of we tap into the zone here, short V-shaped reaction. Yeah, I would have entered in for that. Where it's like, okay, there's the big move down there. I would have entered back in on that for a long. Right. After you get that and also your breaker structure to the upside. Sorry, I'll try and actually make this bigger, because it's like, why am I, that's what she said. I'll try and make this bigger, because it's like, why am I trying to trade with it being so weird? There we go, make this easier for everyone. Okay, where's your last, there's my brush there. Okay, so it's like, how we do it, we would just go like that. Oh, look at that, we've had a fractal breaker structure. Why is this a fractal one? Because here's your previous high, it's like goes up, after that it starts going down. Okay, so that's your high. And then you only need, with fractal, on the smaller time frames, this is fractal, you only need a wick above, and you go with the nearest low. Whereas on the swing, the higher time frame shit I was doing earlier, it's the the lowest low, or the highest high in the zone, and you need candle closure for breaker structure. But this confirms now that would be a market shift, and then it's like when it taps back into that zone, you would enter, and then long position, I would have had it straight there. This isn't any flip or sweep stuff, this is just that. And then you want your TP to just be behind the zone, target 3, well maybe even target 5 sometimes if you've got the balls. And it's within your swing. I'd say a lot of times, see if it's within your swing structure and you go like, oh, like, so see like this, we're not going outside the swing structure. That would have been, that would probably be a 5, you could get away with that. And then it's like, if we went for just 3, like boom, that would have been it. That behind the zone, what more can you ask for? Or even, you can try and get more refined with that stuff, but for me it's like, I've gotten burned a lot, and I find that this is actually a really, really good model, as long as you wait for it to, you could have probably still gone for a 5. I'll just leave that one to play out, see what happens. Oh, what about that one on GBP? I've not even, yeah, it's actually going pretty slow right now. A little bit in profit. How much am I on my phone? Let's see here. We're at £40 of profit. You can see here, this is it live, and there's the £39.40 of profit. I need to get that. This is just an account that I kind of forgot about that I had. And this is one of the fun things about funder accounts, is like they could be unlimited time, a lot of them, so it's even if you don't blow them, you can like bring them back. And I forgot that I had this extra account that when I was trading a few months ago, when was that, like last month maybe? Yeah, last month was so shit. You can see I just gave up. It was basically the last 2 weeks of last month. It was like just tons of bad days like that, and I just gave up. And then you can see here, when I first started, I had like a few good days, and I was like, whoa, I'm the best. Yeah, little things like that. And then when I first started, I took one trade, and I was like, whoa, 100 quid. And that was my first ever trade in a funded account. And now here we are. Okay, and yeah, it's just a case of leave that be. I've shown you how to mark up other charts, how trades I would have taken, what's this, Bitcoin ones, even that still. Oh, never mind, it's broken out my last swing structure. But I feel this video has been going on for too long, rather than me just marking up the same shit over and over again. And yeah, this is all I do, is I've just got like the same couple of pairs that I trade, and I just wait for it to hit key zones. And then when it does, I trade, and I'll just set an alert on the side here. So like here's one for gold, and it's like I will just set that alert for just above here, and it's like, go about your day. As long as you've done your chart work good, then yeah, you get to just run around and do whatever the fuck you want with your day. Like your work will tell you when you need to come back with a text on your phone. It's like, oh damn, that's nice. And for me now, it's the same case. Like I've got other stuff to do, other projects, other business stuff, learn Spanish, go gym, go out in Spain, do all that kind of stuff, and it's like, yeah, it's taken care of, like it's just working away in the background, because I've put the work in today, and it's a really nice feeling. So yeah, hopefully you want to learn how to trade.